Well, it's flat for the markets as the resilience is witnessed only within the mid-cap index. Names like Shriram Transport, TVS Motor, Quest Corp, KPIT Tech, as well as Phoenix Mills and IndusInd Bank are holding out quite well. While on the flip side, Havells, KEI, Mahindra Holidays, DCB, United Spirits, Blue Dart are under pressure. Not to mention M&M Financial, which is down about 7.4%. In fact, that's largely on the back of a weak set of numbers, a high loss due to the higher provisions. Let's connect with Ramesh Iyer, the Managing Director and VC at Mahindra Finance, to understand a little bit more about the earnings. Thank you so much for taking time out. Mr. Iyer, to begin with, disbursements have improved quite sharply on a sequential basis, but profits have come in lower and have been impacted on account of the high provisions. What has led to the sharp rise in NPAs in the quarter?
So one is, I think it's extremely important to understand that this is the first quarter after the moratorium, and there was a very clear possibility of restructuring that was allowed to be given to customers, and we reached out to our customers offering the restructuring. Extremely excited to tell you that the customers are feeling very comfortable about their earnings coming back to normal and are not wanting to resort to a restructuring whereby the interest burden really goes up. So the conscious decision was, when the customers are not wanting to opt for a restructuring and are able to service the loans as they believe going forward, and that's a feedback we have from our branch as well as when we look at standalone December performance within the quarter, we have seen the resemblance of all that I'm saying, and therefore we decided to stay with the NPA being projected higher level, and it will get on its own reversed in the next quarter as the money starts to come in. So instead of restructuring the loans and kind of having a lower provision, and then of course the profitability would have looked better for the quarter, but then we are burdening the customer on a long-term basis. So based on customer feedback and then our own collection efficiency, if we look at, we have a 97% collection efficiency that we touched in December, and for the whole quarter it was close to upward of 90%. So I think put all this together, we've taken a very prudent call to say, let's look at what the customer wants us to do, and I would believe that that would help us as we move into the next quarter. So we are not overly worried about temporarily the delinquency looking higher. And rural, as you know, fourth quarter is a phenomenal quarter from cash flow perspective. So you would see this very quickly get corrected. I'll just quickly add one more to this is, if you look at our net NPA, we have also taken a very prudent decision to increase our coverage, and our net NPA levels are as much as what it was last December. So while the gross NPA has gone up because of reasons that I said, but the net NPA is same as what it is last December. So look at a situation that if we were to reverse this gross NPA in the next quarter, we would get all the benefit that otherwise does not seem to be visible in this quarter.
Back with the market, right here on ET Now, still in conversation with Mr. Ramesh Iyer from Mahindra Finance. Mr. Iyer, apologies for that short commercial break, had to do it. But, just wanted to understand your asset quality as well. While you've stated that Q4 being a seasonal good quarter, one should see better NPAs, but do we have enough provisions to cover the loans on moratorium?
So if you look at our coverage, it is upward of 36-37% is what we are already carrying. Right, and we have an overlay coverage of about 1,000 odd crores, which we made during the last few quarters. So far as the levels that we are talking of is concerned, we believe with things opening up, with collections improving, and we've not resorted to any repossessions in the last 3 quarters, given the on-the-ground conditions. And now, if we see that things are coming back to normal, and if some of the consumers are not able to repay their loans, want to surrender their asset, even that would help us bring down the gross NPA. My own assumption is, and we are working hard towards that, which is to really have a net NPA level sub 4%. And we don't see that a challenge given where we are and what we see on the ground.
Sure. Disbursements as well have seen very strong growth as I see it on a sequential basis. Help me understand which segments are you seeing strong growth pick up in, and also, there are certain states that are performing better than the rest. If that's the case, if you could highlight that as well.
So clearly, top of the list is tractors, which have shown good traction. there's demand for tractor, and with the infra opening up, I would continue to believe that the tractor demand will even push up further going forward, because so far we have seen largely, farm use buyers taking tractors. Once the infra opens up, you would see people buying tractors with trailers, etc. So both in terms of growth, we have seen tractor, and even going forward, we would believe that tractor would drive the growth for us surely. The second area that we've seen is the pickup range of vehicles, LCV, small vehicles. Again, essential goods carrier, local goods transportation. So that has done pretty well. That's the other growth that we have seen. Pre-owned vehicles have shown decent traction, while availability has been a challenge. I want to quickly add one thing, which is if the vehicles and tractors were available sufficient in quantity, we would have even seen a much higher growth from here. So I think going forward, we are very confident that the growth momentum will maintain. The rural sentiments are very positive, and therefore we don't see a pressure on the growth front, as well as we just talked about it, even on the collection front. So I think we are looking forward to a phenomenally good time going forward.
Okay, thank you so much for joining us on that, Mr. Iyer.